Well, good evening. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Tuesday, the 20th of May, 2025. We're about 6:40 p.m. Central Time. Hope you watched CNBC to see the interviews today. There were a series of them with Elon Musk. I think they're doing another one. Literally, as I'm talking, it's on one of my monitors behind me. It's from earlier in the day. But it gives you an idea what he's looking for and how he's thinking robots, autonomous driving, how it's all going to work. And I'll talk about more about that when we get to our SPDR ETF wrap-up. Suffice to say, I think we've entered a period, and I mentioned this last night when I brought up the charts, where the market wants to consolidate it as a minimum what it's gained, and maybe that was the rally, and now it needs to pull back. I'm wrong in my concept if the markets go to a new high here, and they're not that far from it. So it's not like, oh, it's got to run away for Ira to be wrong. That's not the case at all. You'll see that. Getting a nice little rally in all of the energies. Nat gas giving back a little bit, but it was up sharply today, and that's just what I wanted to see out of this market. These markets, it's interesting because what I think they're running on in part is the news. You get the Mortgage Bankers Association. You get that every week at 6 in the morning on tomorrow morning. You'll get it, for example, on Wednesday. But it's the API number that I think moved the energy. You put in only 2.5 million barrels, which is way under what you did last week. But look at how much you're taking out. You're taking a lot out of the market now, and I'd expect that's going to be the case. The stilts will be back and forth because it's a lot of jet fuel and the like. But the gas stocks, you got to keep your eye on that. And as they take off, what's happening is people are hitting the road. I know my own son is camping out somewhere for a week or two. So you've got people driving around. And as we get towards Memorial Day and Labor Day holidays, everything coming up July 4th, everybody hits the road. You know that. So you're into that driving season time, so you keep your eye on it. You're going to get the EIA petroleum stocks, which will go against that number either yes, no, you were right, well, we're right. One's independent, one's the EIA, and that's at 9:30 in the morning. So today I was looking at the market, and there's still the dollar weakness. You're down another 31 points. Most currencies are up against the dollar. When you take a look at what the market's doing here in bonds and notes, well, it's going stable, which is a good thing. You got over 5%, as you know, in the 30-year recently. You've backed off a little bit, not a heck of a lot. The 10-year notes around 4.5%, just hanging in there. So let's take a look at what we've got. You have a market that's run virtually straight up. You know nothing grows to the sky, all right? I know you're going to tell me this is just going to keep going. You may be very right. When I look at this, and that was the weekly, and I look here, you can see how this market's come up. The old highs are all back here, as you can see. I drew a line so you can approximately see it. I think this high is really 62.39. But that's fine. You're close enough. And to move it that little bit, I can do it. I just forgot to do it. Simple. But from where you're at right now, in order to get there, you still got to move up pretty much in the S&P. I say, eventually all rallies like this need to consolidate what they've done. Where it comes in, why it comes in, well, you use momentum indices and you look at moving averages. This market had zero problem on a daily basis of getting over the 200 and the 100-day average. Now when it breaks back, and eventually it'll break back, I would look for support in this whole cluster. So everything from this 58.73, 58.29, the 100-day average, and in red, the 18-day average, that's the cluster of support that I'm looking for when and if the market breaks down. In terms of resistance, you hit the Bollinger Band. You did some sideways work, but you actually did move higher, which was very nice. And that's happening because you still have an embedded reading. Until this reading disappears, breaks in this market, in my opinion, are being bought by the pro. They'll bail if the red line, in my opinion, again, closes under 79. And barring that, I just think they're buying the breaks in the market. I think the same thing is at work in the June mini NASDAQ. You're in a consolidation phase, but these breaks get bought. And take a look at these moving averages. Again, that cluster is coming together, much better defined here. They're much, much tighter. The cluster in the Dow is very different. It's a resistance cluster on the top that the market is paying attention to with the Bollinger Band, but it too has the embedded reading. So I look at all three of these indices and say, the red line, the momentum, it needs to get under 79 for you to get and say, I don't want to be long anymore. Until that occurs, breaks, how big? Well, I'll let you figure that out with your broker. I tell my clients where they're going, but they're in my paid subscriber videos as to where I think this market might be interesting and how the pros, I think, are going to nibble in the market. In the Russell, the resistance we didn't even hit. You never were able to hit even the 100-day average. Now, in this market, you're still embedded. So it's the same story. We'll see which ones give up and where they give up. Their goal, if they break down with that, are those moving averages. When we look at the DAX right here, come on, you're right into the Bollinger Band, but you're embedded. So while I think the pros are coming out at the upper Bollinger Band on a chunk of their position, I don't think they give the whole thing up unless and until the red line closes under 79. In the 10-year notes, we're holding the 100-day averages. We're trying to get a little bit of a rally. The trend has been down, but the real battle's right here at that 10-year, at that green line, the 100-day average of closes with further support down to the Bollinger Band. Same in the 2-year note. So this market still have the bearish bias, not bullish bias, but resistance, both of them, their 18-day average of closes. In the dollar, when we came up and finally started with this pattern that I just pointed out to you yesterday, the lower highs, lower lows, I said that rally's over. You're probably going to go back to the 18-day average to fight a battle. Tell me that's not what you're doing. And the opposite, the flip-flop would happen in the euro because 57% of the dollar index is made up of the euro. So they sort of mirror each other in opposite ways, a reverse image. British pound could be going to the upper Bollinger Band, 134.43. It's an overbought territory. I don't think you want to overstay your hand. Be sure you have tight stops if you're playing that market. In Bitcoin, you can see how the market continues to move higher. Again, the embedded reading. You never fight, in my opinion, the Bollinger Band. Generally, if they're bullish embedded here, you're going to be over the 18-day average and in an uptrend. In the Brent, look for resistance. You heard me. This market's not yet embedded, so I think the 70, it's going to be the 67.80 level should be the resistance point, which is the upper band there. I think it'll be 64.45, let's call it, in the July crude. In the gasoline, I look for this area to be a big resistance, but I think you've begun your spring driving, and I think on breaks you're going to see the pros buying this market. And in that gas, I want to see a battle develop here and ultimately a sell pattern develop. We'll see if it comes. With that, I'm Ira Epstein. I want to remind you that we have for you all the free offers on our website. All you need to do is go to iraepstein.com, free offers. You'll see that there's a whole window here, and they'll change. Scroll through them. You choose which one you would want. At the bottom, you put in your name, your email address. We'll get everything emailed to you right away. There's quite a bit to choose from. You'll have an icon up here. You can always call us as well if you want any of these. I'm Ira. Have yourself a good evening.